Gold rallies after December payrolls disappoint. We have Peter Hugg next. And we're back with a brand new 2014 edition of For Pete's Sake. Peter, Happy New Year. Good to have you back.
Happy New Year, Daniela. Nice to be back.
And what a day to be back, Peter. Job numbers out today, the rate dropping to 6.7%. I know offline we were saying how dismal this seems, but others are saying we should just ignore these numbers. What do you make of it all?
I think it's premature to react to one number. If you look at the data that has come out over the past 10 days, this number certainly surprised the market. With the ADP numbers coming out on Wednesday, most analysts were anticipating job creation north of 200,000. I suggested this morning under 180 would create some issues for the metals, and the number that came up this morning, I think, just caught everybody totally by surprise, and the traders in the metals were predominantly short this market in anticipation of a stronger employment number, and they scrambled and tried to get through the door at the same time, and that's why you're seeing this pop in the metals since the release of the numbers.
Right, so we're seeing gold rally here a bit, Peter. How do you see the metal set up for the new year?
Again, it's a Friday. The numbers caught everybody by surprise. We're still in the trading range, the broader trading range here being the 1220, 1255 level. So there's been, no break on the upside yet. I mean, if 1255 were taken out coming into next week, I'd have to revisit my assumptions and then maybe take on a more bullish stance. Right here at 1244, I consider this neutral territory. I wouldn't be aggressive either way on this market until we get some more data.
Now let's look at silver, Peter. I had some analysts point out that the ratio of gold-silver is currently 62-1. Now this is a ratio that we saw most of and throughout last year, but some people find this surprising and say this could indicate that silver could outperform gold.
I've been trading it that way myself. The ratio has been trading sort of between 58 and 64 for most of last year. And as the silver gold ratio approaches the 62 level, buying silver, selling gold in anticipation of the ratio working its way back to the 58, 59 level has been a trade that's worked for most of last year. So I see no reason to change that trade. So at this level, if you were asking me a question at a 62 ratio, what would I do? The trade would be to buy silver, short gold. In anticipation of the ratio tightening up back to about 59.
Finally, Peter, let's look at the ECB announcement that came out on Thursday. They left rates unchanged as the Eurozone struggles with deflationary pressures. Could this have an impact on the U.S. economy or gold?
Yeah, I wrote in my commentary this morning, I think the bigger macro picture is this rate differential that we're going to start seeing in between the U.S. and the Eurozone. Draghi came out yesterday, again, leaving interest rates unchanged in the Eurozone and indicating still some concern on deflationary pressures in Europe. If the U.S. economy has turned the corner, and obviously these employment numbers today suggest that, it might not have done that yet, but if the U.S. economy has turned the corner, I would suggest that U.S. rates will be on a firmer bias through 2014, at least the first 6 months. And if the Eurozone holds where they're at, it would suggest to me capital flows out of the euro into the dollar, which could prove to be a significant headwind for the metals, at least in the first quarter or first half of this year.
All right, Peter, that's all the time we have left. Final thoughts for investors as we head into the weekend?
Well, it's a Friday. Numbers were disappointing. I think most of the move is behind us. I don't think we're going to see gold, below 1235 before the end of the day. I also don't see gold over 1250 by the end of the day. I think we've, the traders have done what they've needed to do after the numbers, and the market should sort of close in around the 1240, 1238 level, in my opinion. And then next week, I think the key catalyst for the metals next week will be watching the equity market. If the equity market in the U.S. tends to run into some issues, and we get some significant selling, I think that could be price supportive for the metals throughout next week.
Great thoughts, Peter. Thanks so much for being with us.
You're welcome.
And thanks for watching this edition of For Pete's Sake. Email us. We want to hear from you at newsfeedback@kitco.com, or you can follow me on Twitter at Daniela Cambone. Happy weekend and happy trading.